Okay, welcome all of you all to the another discussion session. This is March 2021 Corporate Taxation, which is your SL3, the Law and Tax Pillar paper discussion. Okay, then under this major heading, we are going to discuss the answers. Like I have discussed the answers of that December online paper, the same way the calculation questions we will do. I'll do all the calculation questions with the explanations, but with reference to the writing part of the answers, I will give the first thing I am analyzing the question. Secondly, I will give the answer format, because it's the one of the key thing you should approach to the question. Okay, it's not just a mere discussion of the answers. You are preparing for this time examination, the June 2021 examination. Therefore, I need all of you to be very particular in for this upcoming examination by taking the help of this March 2021 examination paper. That is the ultimate objective of this discussion, to prepare all SL3 students for June 2021 examination. Okay. Then we will come to the discussion of the paper. In that, first I need to take you all through on the analysis of the paper. It is analysis of the March 2021 paper. Then in that, what we can do, first we will analyze what are the areas of the three questions tested in the examination, because before go for the any of the entire paper, it's good for all of us to look at what the examiner has asked from all three of this the questions with reference to your syllabus learning outcomes. Okay, then this is the quick analysis of the paper which March 2021. Okay, this is section 1, question 1. As usual, it is non-resident and international taxation. Now the format of the paper is same. I am adding some things for you because this is very close to your examination, June 2021. Therefore, maybe the questions may be not tested again for your examination, but you have to learn a lesson from this one. How are you going to pass the examination in June 2021? That is the main focus. Okay. Then wherever it is the paper, the structure of the paper is same. In that same structure, the part A on section 1, question 1, the determination of tax liability, the explaining concept of permanent establishment. Even I am doing the taxation of the non-resident and international taxation, this permanent establishment and Sri Lanka permanent establishment under section 195, as well as I have discussed the Singapore and Sri Lanka treaty in a theory session. I am focusing on theory session. Then in that also, as a key perspective, key article, the article 5 I have discussed, and again what is the provisions of the Inland Revenue Act we have discussed. Then now you all planning to go for June 2021 examination, therefore that's why I am taking all these things together. Okay. Then first part for the 8 marks, if I am not mistakenly, for 8 marks it is for the whether this is a permanent establishment or not, and before go for the permanent establishment, whether this person is liable to pay tax in Sri Lanka or not, you have to determine. Second one, the part B of the question paper, tax liability applicable to non-resident person. It's the continuously that is the tested. Then it is Again, it's a business undertaking, a non-resident person, a business undertaking. Therefore, the income tax liability, it's the income tax liability in Sri Lanka plus the income tax liability as a remittance tax. Both you have to compute it. Then the part C, it's separately asked for the 3 marks computation of remittance tax and the part D, this kind of a question previously tested in December 2018 examination. The ethical principles in taxation. Now lamai, these it is for the 5 marks. It's in the section 1, question 1. For the 5 marks, it is ethical principles in taxation. Even you can think and write an answer. If you have a common sense, you are the financial students and you all studying the auditing, then this kind of things you can think and write these scenario based questions. You can read the question and write the answer. Therefore, this 25 marks on non-resident and international taxation, the combinedly, it's the 5 marks goes to the ethical principles of the taxation. Okay, then the next one, which is the next question, which is section 1, question 2, value added tax. Okay, the next question is on the value added tax. In the value added tax and the income tax, the both it has tested in the this part, the assessing the balance VAT payable for the taxable period. Then you have to compute, it's a computation part of it, you have to compute the balance VAT payable. Balance VAT, but this is continuously asked question, the same requirement, the same way for the 10 marks it has tested. Part B, the penal provisions. I must, not must, I shall say this 5 marks. This is asked for the 5 marks. The penal provisions on RIP and RIA, this is a bonus question to the students. It is as per the Gazette notification, this heading is there. If you are referred to Gazette notification and you can, it's copyright of the Gazette notification, copy and write from it. It is one of the key thing, importance of the open book referential, which your SL3 examination, if you know the Gazette, if you have read it, then in the Gazette, there is a heading called penal provision that has tested in your examination. Okay. That has tested in your examination. That's for the 5 marks. It is penal provisions for the RIS and RIP as per the Gazette notification. And C, part C is for the tax planning for the 10 marks. Minimizing of tax impact while expanding the business. Where we are going to expand the business, how are we going to minimize the tax implication? Okay. Then for this part C, this as this, the same way in the December 2020 paper under section 3, this kind of area has tested. Then this is not in the equal way, but it is, if you have done that paper, you have some idea about how am I going to write this kind of answer. Now for you all, the two, the same kind of the questions which you can practice. Okay. Then it is for the 10 marks. It is for the 10 marks. And the question, the section 2, question 3, it's based on pre-scene, the HCL, which is our the healthcare drugs the private limited, which is our the pre-scene for the even December and for March examination. Therefore, the same pre-scene, the student who done the examination, they are very much familiar with the pre-scene because it's twice tested. in that present, which is 50 marks question, computation of balance tax payable by a resident company, continuously the repetition of this question for the 30 marks, the same requirement. And part B, advice on tax implication, benefits of business decision. When we are taking a decision, maybe business expansion, maybe for new investment decision, dividend decision, business decision, then what is the tax implications? And tax implications means you have to analyze whether it is negative or positive, and the benefits, what are the concessions available, are there any exemptions, can we take the qualifying payment benefits. Likewise, you have to analyze that. And the part C, Roman 1 and 2, it's income tax administration, rather calling as income tax administration. It is for the statutory provisions of the income tax. In that case law provision, the 2 case laws tested in that also lamai for December 2020 examination, the AW David Tappuhami, that case law has tested the same case law also tested in this, in a kind of a same scenario. Then I may say this is one of the patterns of the paper and the format of the paper, more or less it is same. Then expect this kind of a format, this kind of questions in your June 2021 examination also. But I need to put some full stop here, because even the paper is like this, the examiner's comment is very much important. I am not going to discuss entire examiner's comment. You can read those comments, but I need to go for the general comments. I thought it's good for the student who are going to sit for this time examination. I thought it was a value addition to you all. Okay, then I will move to the examiner's comment, because it is very important for you to know these things and go, because it help you to take the 50 marks. The pass mark is the 50. Then if you pass from 50, then it's more than enough. But target to achieve the at least 95% of the paper by answering the paper. Okay, we will come to the examiner's comments on the SL3. I am only discussing about the general comments. I am not going by question comments. Okay, then this is corporate taxation SL3 March 2021 examiner's comments. In that we will go for the general comment and how it applicable to your general comment. Although the structure of the paper is the same, yes, agreed. Structure of the paper from 2018 December, which the new act has tested from the 2018 December, from that the same structure is going. Same as previous examinations, a majority of the candidates were unsuccessful in methodically answering the question and were unable to produce reasonably the focused, relevant answers addressing the principles and core components of each requirement. Why you have the first thing examiner is telling, you have not addressed the requirement. I am repeatedly telling to the student, read the requirement and identify the action verb and analyze the requirement and write your answer. But still the issue is there. Then candidates were expected to prepare comprehensive tax computations. You are allowed to do that. Then the 30 marks goes to that part, and not the 30 marks part on the company taxation, resident company taxation, but also in the value added tax, also in the non-resident taxation. You have to do the comprehensive tax computation. It's not easy. Okay, candidates were also expected to display skill in tax plan. It's highly testable. The exemptions, tax planning, the transfer pricing, and how the business, how are you going to apply the reduced tax rate for the particular business. These are continuously tested. Understand methodologies on minimizing tax expenses, continuously tested. Mitigating risk and effective communication with tax authorities, clients and the management, etc. This is taxation is something practical, I am always telling to you. This is not based on the hypothesis, this is not based on assumptions. This is practical thing. In your paper, you must act as a tax consultant. Then to act as a tax consultant, you should have high level of theory knowledge and you should know how to apply it to the given scenario. But that part also a little bit lacking. Therefore, answer comprising of mere technical knowledge will not score marks at this level. Every time I have provided the answer formats to you all. First take the theoretical part and then apply that theoretical part to the given scenario. The second thing you should apply. You should apply that theory part to the given scenario. Nikan theory liyala, you can't score marks. You can't score marks, okay? Then third one, it should be noted that students are expected to structure their answers based on the scenarios. The answer should be based on scenario. Where you cannot write what you think in the examination. You have to adapt to the given question and you have to write the answer. Okay, scenarios that will be presented in the questions, essential theory application to the given scenario is core. Why I am telling you should pass this in June 2021 examination. Therefore, if you are still you are in the study, write your answers, check your answer in order with the question. Did you understand the question? You have ample time, start from now, okay? Therefore, the answer should be applied to the context of the scenarios rather than being vague and general. You cannot write the general answer. Now, if the client came to your office and if he asks a question, you can't just tell in the app, this is the section. It's not enough. You have to take the issue of the client and you have to address the issue based on the provisions of the Inland Revenue Act, maybe case law, maybe treaties. Then you have to do that. That has not done in your answers. Then furthermore, candidates should be able to display their understanding and the appreciation of action verbs. ළමයි මං කට කැඩෙනකම් මේක හැමදාම කිව්වා. You have to, for my all students, I have told, read the requirement first, identify the action verbs. Action verb tier 1 and tier 6 up to synthesis we have look at. I have applied that. Can you remember in the revision session, I have highlighted that action verbs and done. But it's happy the most of the students take the advantage and they done a good job. But the target is this examination and student who still is struggling with this paper, okay? Expected learning outcome, knowledge process, knowledge dimensions, etc. In respect of producing meaningful answer, your answer, I am always telling, answer should have answer format. The theoretical part, application to the question, it's really important. Then if you need to argue with that under discussion forum like that, you have to argue, and the recommendation and conclusion that should be included in your answer. Okay, then the following reasons could have been adverse impact on student performance. These bullets, these 4 bullets you should be avoid in your examination. Lack of preparation and understanding of the pre-seen case study material. You should understand it clearly. It's your company till the end of the examination. Anything happen to your company, it's under your responsibilities and duties. Second one, lack of understanding of the requirement of the question. Read the requirement, analyze the requirement, analyze the sub-requirements in the main requirement, and go for the facts of the question and write your answer. The 15 minutes reading time, whatever the reading time, you should effectively use. And third one, inability to manage the time and producing irrelevant facts resulting in time consume. The constraints. It's a 3 hours and 15 minutes. Then in that, don't write unnecessary things. Manage your time. It's a the 1 mark 1.8 minutes. It's 180 minutes. Then this is repeatedly I am telling, but please use these practices for your examination. Be a smart student at the examination. Manage your time. Lack of communication and presentation skills. If the examiner has asked write a report, write a report. It's a 2 board of directors, date, heading and the content, and then yours faithfully tax consultant and so on. Therefore, the presentation skills and the answer format, all these things are matters for your answer. You are in the highest level in the CA, that strategic level, therefore these things are expected from you. Why I have communicated this? Before starting the answer discussion of the paper or the paper discussion, I really need to communicate all these things to you to have the flying colors in June 2021 examination to all of you all. Okay. Then I am starting with the paper. As usual, I am starting with the pre-seen question based on the unseen, the question 3, because it is one of the main question in the paper. I am starting from this, how I am approached to the question. You all know the pre-seen, then first we will read the requirement, and while reading the facts lamai, we will come to the answer. The same form how I have done previously. The answer and the question both we will do while reading the question. Okay. Then let me open the answer also. Okay, we will start. In here, question 3, based on the common pre-seen, this section 2, we will come to the requirement part of the question. In that, required, assess the balance income tax payable or refund due, if any, in respect of year of assessment 1920. In your case, your year of assessment is a 2021, but without any amendments to the Inland Revenue Act. Okay. Then it's for 30 marks. And part B I am not going to read now. First we will do the computation, and we will come to the next writing part as the B and the C. Okay. Assess the balance income tax payable. Then as usual, I am starting from the facts of the question. In addition to the information provided in the pre-seen in relation to healthcare and healthcare and leisure private limited HCL, you are provided with the following additional information for the year ended 31st March 2020. The detailed unaudited income statement of HCL for the year ended 31st March 2020 is given below. Revenue, cost of sales, GP, other operating income, selling and distribution expenses, admin expenses, operating profit, finance cost, finance income, profit before tax. This is your starting point of your business income calculation. I am starting from the business income calculation. Then it's a 2.4 billion. If I have taken to that, it's a HCL private limited. The TIN number, we don't have a TIN number, then do like this. Schedules to tax computation for the year of assessment 1920. Schedule 1, computation of assessable income from business. Then it's a rupees 1000 and net profit before taxation as per the paper, it's a 2.4 billion. Okay, it's a starting point for the answer. Then next one, next revenue, this is a diversified business, lot of business activities in the same under the umbrella of the HCL. Then there are 5 main revenue generation, the SBUs and other operating income. Now Lamai, what I am doing as usual, I am starting from the adjustments. And after that I will come to the income statement and all. Just take in 1-2 minutes, we will read the question. Rental income there under other operating income, we need to look at whether it is effectively connected to the business or whether it is investment income. Royalty income, more or less investment income. Dividend income from Healthcare Drugs Bangladesh. In the Healthcare Drugs Bangladesh, can you remember the HCL has a foreign investment? It's more than 10%. This last time also this has tested. Then it's a more than 10%. Anyway, this dividend income is exempted from the income tax. Then cash award received for being a high quality healthcare provider in the year 2019. Cash award. Then this is received for being a high quality healthcare provider. Being a high quality healthcare provider, you have received the cash award. What is that? Because you are being in that business, you have received this gift received on behalf of the business. Effectively connected to the business, then this is part of the business income. Profit on sale of the fixed asset, anyway accounting profit should be disallowed, that means should be removed from the profit before tax. Gain on disposal of private company shares, the gain on disposal of, this is accounting gain on the disposal of private company shares, the 30,000, it should be removed and you have to calculate what Lamai? Gain on realization of investment asset. What is your investment asset? Shares. Which shares? Privately equated shares. Then is it liable for income tax or exempted? It is liable for the income tax. If it is a quoted public company shares, the gain on disposal of listed shares, it is exempted. Okay, while reading you have to analyze the question like this in your examination. Even still I am telling you, when doing the question I am doing the same thing. Read the adjustment and whether it's disallowed, allowed, I am doing all these things. See my paper? Then as the student you have to do all these things to take the marks. The effective reading of the question is essential. Then note 3, an extract of some of the expenses recorded under administrative expenses and selling and distribution expenses is follows. Remuneration, it's normally incurred for the production of income. Then provision for gratuity, it is a provision, normally disallowed. Brand launching expenses, we don't know, we need the further information. R&D, we need further information. Write-off of outdated drugs, write-off of inventory, it is allowable deduction under section 11. Office maintenance and overhead cost, it's normally allowable, we will see. Staff welfare, normally allowable, but if there are adjustment we need to do. Repair and maintenance, we have to apply section 14. Fines and penalties, it's disallowed under section 10 subsection 1b, but if it is paid to the government, we have to look at the information. Advertisement and business promotion, normally allowable, but if there is a adjustment we need to look at. Depreciation and amortization, disallowed under section 10 subsection 1b. ISO certification charges, allowable deduction. Anniversary expenses not incurred for the production of income, disallowed. CSR expenses, anyway it's a kind of donations. CSR, by doing the CSR activities, how are you going to quantify your revenue has increased, your client base, the base has increased, no quantifications. These are disallowable expenses under not incurred for the production of income. Then see, change in fair value of investment property. Now it is in the within bracket. Now exam pressure Lama, you may be confused, but don't confuse. Take a 1 minute, take a 30 second and read it carefully. Change in fair value of investment property. It has reduced the expenses. This is a gain. This is again, it has reduced the expenses, therefore it has increased the accounting profit before tax, thereby you have to remove this from the accounting profit before tax in your the calculation. Why? Because this is unrealized gain. To take the mark to market, this has done this is unrealized gain. Then a finance cost, term loan and debenture interest, bank OD, lease interest, bank charges. Anyway, bank charges also included under the finance cost. Be careful when you are taking the amounts to the finance cost, only take the long term loan, bank OD and the lease interest. Okay, we will see the share capital plus reserves into 4 times, or whether all the finance costs are eligible to deduct under section 12, we will look at. Finance income, interest income from FD gross, it is investment income. Interest income on listed debentures, investment income under section 7. Staff loan interest, my business is not providing staff loan, this is part of the investment income. Change in fair value of financial assets through fair value through profit and loss, this is again unrealized gain. It has included in the finance income, it should be the remove from the PBT. Okay, these are the taking 1-2 minutes, we have done the quick reading by analyzing the adjustment. Now I am starting from the adjustments to each of these expenses and income. Roman 2, during the year rupees 50 million worth of bare land has been purchased and rented out from 1st April 2019 to a maritime agent to operate a warehouse. The monthly rent of rupees 200,000 was recorded under rental income. Withholding tax on this payment has been deducted up to December 2019 by the withholding agent. That means maritime company, the maritime agent who is operating this bare land has deducted the 10% of the WHT. That means 200,000 into 10% for the 9 months, 180,000. It has deducted by the withholding agent. Land purchase is recorded in the balance sheet under investment property. The very clearly examiner has given what? This has recognized as the investment property. This is not effectively connected to the business. That thing you have to recognize first. Okay, then that's the one adjustment. The second adjustment, the balance rental income is derived from renting space within the hospital for the optician and pastry shop as well as car parking fee. WHT has not been deducted on these payments. These income from the opticians and the pastry shop. In a hospital, there is eye care, optician and the pastry shop as well as the car park. Without having these things, can you imagine of the hospital? No. Therefore, apply these things to the patrical sense. These are effectively connected to the hospital. The hospital is a healthcare business. The service of the healthcare, it is the business. Therefore, these are effectively connected to the business. Okay. Now, we will see what is our rent income, Lamai. Under the other operating income, the rental income 25,300,000. In this, 200,000 into 12 goes to the investment income, and the withholding tax of 10% for the 9 months is a tax credit. Balance rental income effectively connected to the business. Why I am telling all these three? When you are reading the adjustment, don't wait till the last moment to do the adjustment in one. Ek adjustment එකකින් තව ටැන් කීපයකට යන්න ඕන නම් ඒක කරලා ඉවර කරන්න. Finish off the adjustment entry, check with the P&L and done. Complete that and then come to the leisurely the second point. Withholding tax එක ආමම් පස්සේ අඩු කරනවා. ඒක investment income එකට පස්සේ අරන් යනවා. Don't do these things. It's utter wasting of your time. That's why I am telling, first have your format, tax computation sheet, business income, investment income and any working. I'm not telling you to have these formats, but please have a proper format of your. When the adjustment done, take all these things in a one time and complete it. Okay. as we are doing now, then we will see the answer. This is rental income, the rented for maritime agent for warehouse. It is the investment income under section 7 subsection 2a rent income. It's 200,000 into 12 months, 200,000 into 12 months. Then it is a part of the investment income, therefore you have to remove it from the business income. Now at once you are removing this from the business income, come to the investment income, and under the investment income, this is HCL Private Limited and TIN number, schedules to tax computation, and this is a schedule for the investment income. Then in that rental income, rented for maritime agent for warehouse, this one, please take this as the investment income and complete the adjustment in there, then it over. Then again in the business income, we will come to the next one, which is the rental income, the optician and the pastry shop within the hospital. No adjustment required. Why? It is effectively connected to the business under section 6 subsection G. But you have to show the amount, lamai. The total rent income as per the given, it is 25,300. In that 2,400 goes to investment income. Then the balance, what is the rent income effectively connected to the business, is 22,900. Show that, and no adjustment required because it is effectively connected to the business. If you can remember the sections, write the section. It's your answer script, then it's up to you all. But at least if you cannot remember the sections, at least write the reason. Write the reason, it's adding value to you, lamai, okay? Then no adjustment required. Now I am coming to the taxable income, which is my tax computation sheet, HCL Private Limited, TIN, computation of income tax liability for the year of assessment 1920, and I will take that withholding as the tax credit. Now don't forget, it has given up to 31st December 2019 WST has deducted. That means only 9 months. Then in the investment income you have, now students forget these things. In 2.4 million, okay, 2.4 million into 10%, 240. No, it's only for the 9 months. Then it's 200,000 into 9 months, it's 180. In that 10% on 1,800 into 10% is 180. Then that adjustment fully completed, okay. Then I am going to the next adjustment in the Roman 3 adjustment of the paper. What is the Roman 3 adjustment? Royalty income was received from Healthcare Drugs Bangladesh Limited for the use of the logo brand of baby care products. The income was remitted by the foreign party after deducting WST at 10%. The foreign tax credit. We have received the royalty income from our foreign associate company, the HCL Bangladesh Limited. Then from that, when we are receiving the royalty income, 10% already deducted. According to the treaties, the 10% has deducted. That is our foreign tax credit. The same adjustment we had in the previous paper also. Not on royalty, but on the other payment. Okay. Then it's on the brand. Brand is an intangible asset. On the intangible asset, as the investment receipt, you have received the royalty income. Then rupees 3.6 million was incurred as brand launching expenses, and it was recorded under selling and distribution expenses. What is this, lamai? What is this? The royalty income is the investment income. Royalty income is the investment income. To gain this investment income, there are costs incurred. List cost incurred, or I am using the expenses incurred in production of income of investment. Can you remember in the section 11 you can deduct expenditure incurred for the production of income of business and investment both. Therefore, one side there is a royalty income, in the other side the company has incurred the expenditure on that subject matter, which is the brand. Then it has included in the selling and distribution expenses, which is not. It is the first thing you have to recognize. Brand is a royalty, the royalty has received based on the brand. It is the investment income, therefore it should be considered under investment income. Secondly, any expenditure incurred on the investment income, it should not be accounted under business income, it should be transferred to the investment income as a deduction. Okay, we will do this, come to the answer from the business income. It's a first royalty income, then we will see where it is in the paper. It is in the other income of the paper, the other operating income. In here, royalty income net 2.7. Why it's net? 10% foreign tax credit has deducted and the HCL only received the net royalty income. Then this the 2,700 we need to remove from the business income. Why? It is part of the investment income. Royalty income net, investment income under section 7 subsection 2a. Then you have to second one, in the same time we will do this, brand launching expenses. What is this? Expenses incurred on the brand. There is an income received on brand, which is royalty income. Then it is applicable to the investment income. Then this is deduction under investment income, not the deduction under business income. This is a deduction relevant to the other source of income, which is investment. Therefore, we are not allowing this to deduct in the business income calculation. Therefore, it should be disallowed. The 3.6 million you have to disallowed when arriving into the business income. I think the basis is explained. I think you have understood that basis why it should be disallowed. And what is the next treatment on the this royalty income, which is under investment income? We will come to the royalty income. Gross royalty income, anyway we have to recognize it is net is 2,700. After deducting 10% it has received, that means it's 90. What is 100 is 3,000. Then expenses incurred for the production of income under section 11, production of income of investment, brand launching expenses 3.6 million. Then you can see, Lamai, there is a loss from this royalty income. What is this loss? Under section 19, this is the investment loss. Then this loss from the royalty, this is investment loss. Can you remember the criteria of the claiming of loss? Investment loss can be set off against only investment income, but there is another requirement, capital loss, which is a loss incurred from the disposal of the investment asset. Gain from the investment asset cannot be reduced from the loss of the investment asset. Please have that the theoretical background also when doing the question. Then there is a investment loss. This is the investment loss from what, Lamai? Investment activities. This is from the investment activities. Then this is investment activity. From that there is a loss. Therefore, this loss can be claimed against what? Investment income. That all adjustment done. Not all adjustment done, there is a tax credit. The foreign tax credit on 3,000 at 10% already deducted. Therefore, under the foreign tax credit section 80, we can claim that the 300 on the royalty income, foreign tax credit on royalty income, HCL Bangladesh. This is can be considered as the tax credit which is properly deducted as the foreign tax credit. Okay. Then the third adjustment we have completely done. Tick rental income done, royalty income done. Then we will come to the fourth adjustment in here. During the year of assessment, the company disposed of 1 million private company shares. When you are looking at the word of shares, Lamai, it should be automatically come to your mind. One is shares are the what? Investment asset. And it has given the private company shares. Then second thing, okay, if it is a private company shares, any gain, it should be taxable, not exempted. Then fourth one, if this is an investment asset, how am I going to value? How am I going to compute the gain? That's the third question. When computing gain, gain is how to compute? Consideration minus cost. Now consideration given cost, whether now it's come to the cost, you have to look at whether this cost has incurred the purchase cost, construction cost, or a manufacturing or a production cost. Whether this has incurred in which year, acquired in which year. Is it prior to 30th September 2017 or no, after 30th September 2017? If it is acquired prior to 30th September 2017, you have to go for the transitional provision. The cost is that. The incidental cost, those things are not given. Therefore, when reading this adjustment, for your mind, this thing should be come. Okay. During the, it's a 1 million shares at 40, which was initially issued at 10. The market value of the shares as at 30th September 2017 was rupees 25. Do we need the issue cost of rupees 10? No, it's not needed. Why? The examiner very clearly given the value of shares as at 30th September 2017 as rupees 25. Then consideration 40, cost of the asset as per transitional provision, the shares 25, the gain per share 15 for 1 million shares is the, if I have taken it 1000, it's a 15,000 gain which is subject to 10% of capital gain tax. Okay. Then we will see there is a adjustment, there is a amount recorded in the income statement. See, gain from disposal of private company shares. Accounting gain, first you have to remove, secondly compute the gain for the tax purpose and recorded it properly and apply the tax. Okay. We will come to that part. The business income, first thing, it is gain from disposal of private company shares. It should be tax under the investment income. Accounting gain you have to remove. We have done that. Okay. Then next one, under the investment income, of the gain from realization of investment asset. In that part, disposal of private company shares, how to compute? All these things I have added as the explanatory note. In a much explanative manner I have done, because as for you to the refresh theory of all these things to take the advantage out of this. Okay. Sale proceed from disposal of shares, investment asset. Shares is the investment asset. It's a 40 into 1000. It's a 40,000 less value as at 30th September 2017. It's a 25 into 1000 shares. Why I have taken the value as at 30th September? As per the section 203 subsection 4 transitional provision. Then even you can add one thing to here, the purchase cost or acquisition cost of the shares, it's not applicable. The purchase cost, if you have time Lamai, the purchase cost not applicable, purchase cost not applicable. Just if you have time, take in 1 second and write this. Then it is the gain from realization of the private company shares, it's a 15,000. Is this the end No. May ekapara, if you can do all the at once, if you can all these things lamai, it is a really good. It's come with the Patrice. Then I am saying to you from December 2018 to up to now, please Patrice all this the company taxation question before the examination. This is where a place for the students score high marks at the examination. That high marks matters for you to pass the examination. Okay, it is 30 marks. It's based on your understanding and the speed of calculation. To have that speed, you should have a better Patrice of the past papers. Okay, as well as whatever the question from the revision kit, whatever. Then this is the gain from realization of private equity shares. From this, the capital gain tax lamai. Most of the students forget to take it. Capital gain tax, the transactional tax. After the transaction, within a month, you have to make the payment and file the return. Then at that time you are paying at the rate of 10%. Then come to the taxable income and take it as the investment asset on private company shares. This 1,500 as a tax credit, take it, and if you have take that here, you can remember under the taxable income. This is a composition of the taxable income under different rates. Then you have to remove that capital gain from the taxable income and apply the rate. Okay, then do these things together. Then next adjustment we will go, I think it's the fifth adjustment. The fifth one, during the year of assessment, the motor car used by the managing director was disposed of at 12.1 million, 12,100,000. It was purchased during the year of assessment 16-17, when the old Act number 10 of 2006 is there. It has purchased or rather asset acquired prior to 1st April 2018 at rupees 10 million. Further, the land used as a container yard by HCL was disposed of for a consideration of rupees 10 million. It was acquired in mid 2016 at a cost of rupees 4 million. Now lamai, in this kind of the adjustment, now it has a mix. One, it has given, I am talking about the adjustment number 5. In adjustment number 5, the vehicle, one is given, I will take the assets, the two asset is talking about the two asset. The one is the motor vehicle which is used for the travelling purpose, used for the travelling purpose. Other one is the land. This is the bare land, and it is used for the container yard. Land, container yard. This has used as a container yard. Then is this the investment asset or the capital asset of the business? That's the first thing you have to recognize at the examination. The examiner has given more information about the land. It is the use as a container yard. It's effectively connected to the business. This is the capital asset of the business. Capital asset of the business. If you have not recognized this one, your answer will be will be wrong entirely, because if you have recognized this as an investment asset, then you are applying the 10% and calculation also going wrong. This is the capital asset of the business. If this is the capital asset of the business, how am I going to tax that? It is under section 6 subsection 2b. Not B, it's C. Subsection 2C, which is the realization of capital assets or liability of the business is part of the business income. How to compute the consideration minus cost? What is the consideration? Consideration is the 10 million. The cost is 4 million. then it's a 6 million gain. What is the tax rate this is going to tax? It will be taxed at the company tax rate, it's a 28%. Did you notice these things? Very easy adjustment. If you know this, is a theoretical angle. If you don't know this, going for this side is a difficult. Okay. Then the traveling purpose motor vehicle. A traveling purpose motor vehicle. Can you remember? This is not a commercial vehicle. This is not a commercial vehicle. Then this is not eligible for the capital allowances or in the earlier act depreciation allowances. For tax purposes, we have not taken any benefit out of this, and the traveling purpose motor vehicle, even not either capital asset of the business, even not the depreciable asset. Therefore, the gain can we tax? This is out of scope. The gain cannot tax. Gain cannot tax, not taxable. Okay. Then please have this knowledge, the different type of asset. You should know what is the definition. What is the definition and how it comes under business income and how it comes under investment income, you should know. Okay. Then the adjustment, this 6 million is part of the business income. This is not taxable, and any accounting profit, this should be removed from the business income. We will come to that. We are in the business income. In that the accounting profit on sale of disposal of asset, we have to remove from here. It should be removed. We have done that. Where it was in the paper, it is in the other operating income. In the other operating income, profit from sale of fixed asset 8,100. It should be removed from here. Done. Then gain on disposal of motor car, not taxable. Why? What is the reason? Not a depreciable asset and not a capital asset. Under the Inland Revenue Act number 24 of 2017, the motor car, any vehicle in the travelling purpose, it has not included in the as a capital asset of the business or a depreciable asset. Therefore, the gain we cannot tax. Then gain for tax purposes on disposal of land, which is capital asset of the business. Why it comes as a part of the business income under section 6 subsection 2c, the inclusions of the business income. Then gain equal to consideration minus cost. The consideration 10,000, cost is 4,000, gain is 6,000. It should be liable under business income. Okay, how interesting adjustments these are. Then now you all tell Amma, it's for you madam, it is interesting, but for us at the examination this is really difficult. It is not difficult if you read the adjustment carefully. Only thing you all going for the examination with the high level of knowledge, but application is very poor. That's the issue. Okay. Then the sixth one, during the year of assessment, a survey was carried out by the research institution in Sri Lanka to collect data on the quality of the HCL's pharmaceutical products in relation to the global standards. Is this a research? Now you have to think, now it's done by the research institution in Sri Lanka, okay. Is this scientific? Is this industrial research? Is this high level of the processing or agro product that high for that part? If it has done, no. Then finally, is this for the improvement of the business process or the product? No. This is survey. This is not qualified under R&D. Therefore, the double deduction is not available. But this is a survey done to the production of the income. It is the check the quality. It's highly important when earning the production of income of the pharmaceutical industry of HCL. Therefore, this is allowable deduction as the survey expenditure, but this is not the research and development expenditure. Therefore it not being R&D, the double deduction is not applicable. Okay. Come to this, it is a research and development expenditure in the income statement. I will go through the income statement. Then in the income statement under administration expenses, research and development expenses 3,700 is there. It should be allowable deduction, but the double deduction is not available. Research and development expenses not permitted for additional deduction. This is an expenditure incurred for the production of income and not R&D expenditure as per section 15. Okay. Then I have explained why it has not a permitted deduction under section 15. Since it has deducted once, again you don't have to do anything. Okay. Then we will go for the next adjustment quickly. Staff welfare includes rupees 6.820 incurred in supplying free transport facilities to all the employees in the company. Now see what is the importance of this adjustment. The supplying free transport facility to, what is the word, all the employees. That's why I am telling you to maintain a quality of reading of the question. Okay. All the employees, this is applicable to all the employees of the HCL. Then if you have seen that word, then you know it is not the domestic expenditure. Secondly, it is not the employment benefit. This is administratively impracticable to allocate each of the employees. Therefore, this is allowable deduction. That's all. Okay. This was not considered for PAY tax purposes of individual employees as it was administratively impracticable. No matter, it's done. This is allowable deduction. Tax, for the tax purposes, no adjustments required. Okay. Where the staff welfare, I think it's in the administration expenses. Staff welfare 10,695. What is our adjustment? You have to write that staff welfare allowable deduction since the benefit applicable to all the staff members and it is administratively impracticable to allocate to each employee. While it has given, can you remember under section 197? What is section 197? It is the domestic expenses. Domestic expenditure, the exclusion from the domestic expenditure, the expenses which is administratively impracticable to allocate to employees, it has excluded. Now, the examiner has given all those words to you for you to think and determine what is the answer. Then next one, the repair and maintenance cost of rupees 1.9 million was incurred on structural modification made to a building acquired in year of assessment 1819. A building repair has done, it's repair and maintenance. For a cost of rupees, the building cost is 11.9 million in order to bring the suitable condition to store drugs. Then it is more or less not the maintenance, it's a part of the repair. Then to take the building to the usable or to for the use of the particular purpose. Therefore, then first thing lamai, in this kind of the adjustment, you have to look at what is the category of the depreciable asset. It is building. The cost of the building has given and the repair has given. Now you have to look at what is the provision of the law. Under section 14, it has given if it is a building, the class 4 depreciable asset. What is the maximum limit of the repair to allow? It is 5% of the previous year tax written down value of this building. Can't you compute the previous year tax written down value? You can. Why? Cost has given. You know the number of years, it is 20. Then you have to calculate and you have to take what is allowable repair, what is a disallowable repair. Okay. Then we will look at the adjustment. It is a repair and maintenance in the financial statement where it has mentioned here 1.9 million, it is in the administrative expenses. Now we will come to the answer, the computation part of it. Repair and maintenance cost, what is my asset? It's a building class 4 asset category under 4th schedule, section 14. Tax written down value at the end of the 2018-19. How to calculate, lamai? The cost is 11.9. From 11.9 we have to reduce the capital allowance for the 18-19. Cost minus capital allowances claim, then you are ending up with the tax written down value. Then it is the end of the 18-19 tax written down value is subject to this year compare the repair and improvement the cost eligible limit. Then 5% of the previous year tax written down value is from 11,305, 5%. Actual repair 1.9 million, allowable repair and maintenance, which is it's restricted to 5%, which is 565. What is a disallowable repair and added to the depreciation basis of 2021 lamai? It is 1,335,000. Now it should be disallowed. Here I have not added it to the depreciation basis and show the adjustment in my previous all calculations I have shown that. But lama in this question it has given finally the capital allowances in total for all the assets up to 18-19. Therefore to show this separately is not necessary, but this calculation is more than enough for your answer. That one also we have completed. Then then next adjustment, which is fine was imposed by the Central Environmental Authority, which is a government body, due to the damage caused to the environment by discarding outdated drugs in an inappropriate manner. The destroying of the drugs in an inappropriate manner, there is a fine. Under section 10 subsection 1b Roman 3, yes, Roman 3, this is the fine for the government. Anyway, this is disallowable. What is the amount? It is the fines and penalties 360. It should be disallowed under section 10. Penalty, Central Environmental Authority, fines and penalties paid to government institute under section 10. The subsection 1, it should be subsection 1b. The subsection 1b, it's not the Roman 1, it is the subsection 1b Roman 3, okay. B Roman 3. B Roman 3, it is a disallowable expenditure. It is a disallowable expenditure. We have done that adjustment also. Now next one. The 50th anniversary of HCL was celebrated with the colourful parade and the parade of employees and a musical show, incurring 2 million. Yes, it's wow. By doing that, all of them are enjoined, but for the tax purpose, this should be disallowed. The expenditure not incurred for the production of income. In the P&L, it was mentioned as the anniversary expenses 2 million. It should be disallowed, lama. It is, these are very, very easy adjustment. Anniversary expense not incurred for the production of income, it should be disallowed. Then we will go to the next adjustment. What is the next one? CSR expenses represent donation made to the University of Colombo amounting to 4 million. University of Colombo, it is a government institution. Then this comes under the donation to government. Under the qualifying payments and relief under section 52 and the 5th schedule, this 4 million should be up to the assessable income. This is can be deducted as the deductions from the assessable income. Then, and for planting mango trees with the support of the army of the either side of the road to Katunayake Airport, incurring 840. This is particularly a CSR expense of planting of trees, but this is not categorized or permitted deduction under the qualifying payment. This is not the permitted deduction under the qualifying payment. Therefore, this cannot be deducted from the as a deduction from assessable income, but 4 million can. But lamai altogether, whatever CSR expenses, 4,840,000, the all it should be disallowed when arriving into the business income. Why? It has not incurred for the production of income. We will see the CSR expenses 4,840,000, it should be disallowed. 4,840,000, it should be disallowed when arriving into the business income. Why? It is not incurred for the production of income. Okay. Now, meanwhile, I am coming to the taxable income. Before I miss my qualifying payment, I am coming to here and less qualifying payments, section 52 and 5th schedule to act, the donation to government under the 5th schedule, it can be up to the assessable income. Then for time being, I don't know what is my assessable income, but I have taken entire 4 million here before I miss that point. Okay. And CSR, activity on planting of mango trees, this is not permitted under qualifying payment, that also I have mentioned. Now that entire adjustment I have completed. Next one, which is investment in healthcare drugs Bangladesh Limited was made by obtaining a bank loan of rupees 2.9 million, was paid as interest on this loan, and it was recorded under finance cost. Again, now this is there is an investment on healthcare Bangladesh Limited. On this investment lamai, this is one of the adjustment you have to little bit think. Maybe at the examination point you may miss, but don't miss these things. Think, don't panic, think and then apply what are the information given in the question. Okay. Now, if we have gone for the other operating income, in there is a dividend income from healthcare drugs, the 1,850. Now, we have done the investment in the healthcare drugs, invested in shares. Due to that shares, I have received the dividend income. Since I have the holding percentage of more than 10, then this is exempted for me. It has given in the preceding information. Then this dividend income under the 3rd schedule, that dividend income, the dividend income received from a non-resident person to the resident company based on the holding percentage. The holding percentage, it is the preceding it has given. Then it is holding 10% or more of the value of shares in the company. Then it is exempted under 3rd schedule, item R, it is exempted. Then therefore, this is the income from that investment has exempted. To earn that income, to make that investment, HCL has obtained the loan, obtain a loan. That loan interest can be deducted. One, it is not a part of the business income. You have to remove it from the business income. My next question, can it be deducted from the investment income even? No. Why? The amount, the expenditure incurred to earn the exempt income. What is the exempt income? Exempt dividend income. Can you remember the final withholding payments and the exempt amounts cannot be included in the assessable income of a person. And again, any expenditure incurred on the derive the exempt income, it should be the disallowed. It also given in the section 10. Then therefore, this should be disallowed. The reason of the disallowed, it is the bank loan interest obtained to invest in healthcare drugs Bangladesh Limited. What is the income lamai? Income is a dividend income. From this dividend income, the income is exempted, therefore expenses incurred on this investment should be disallowed. And again, this is not the source of the business, this is the investment. The section 10 subsection 1b4, the 2,900, the loan interest should be the disallowed when arriving into the business income. Okay. Then next one, which is we are in the last few adjustments, I guess so. Yes, then rupees 5 million worth of lorries were acquired under 4 years finance lease in May 2019 for the monthly lease rental of rupees 160,000. The lease rentals due for the year was settled and the interest of rupees 687,000 was recorded under finance cost. Do we need this information on the finance lease agreements entered on or after 1st April 2018? No, Lamai. Under section 31, very clearly it has mentioned, it is a financial arrangement, it's only the blended the loan. All the assets acquired under finance lease, on the cost we can claim the capital allowances. This information is not relevant for your calculation. Okay, we will see in the finance cost. Finance cost, this is a lease interest on 687. It should be subject to the restriction on the finance cost. Then here, term loan and debenture interest, in this 2,900 of the loan interest on which incurred on the investment, it has been included, it should be removed from here. Okay. Then the next adjustment, we will, for this 5 million lorries, we don't have to do anything, but we have to give the capital allowances. We will do it when the adjustment of the capital allowance is there. Then next one, power and energy sector. During year of assessment 14-15, HCL invested rupees 450 million in fixed asset to install new 2 windmill plants and commence a new undertaking under section 17A under Act number 10 of 2006. This is exempted income to generate power and energy through windmills in manner. Commercial operations commenced in January 2016 and profit were generated in the same year of assessment. Under earlier act, under transitional provision, under section 17A, this company has obtained the exemption. From the pre-scene itself, this information has very clearly given, and student, when they are going for the examination, they knew that this kind of adjustment is there. Even in the last time this has tested. An extract of the profit and loss account 2019-20 of this undertaking is shown below. Total revenue of the exempted undertaking is given. Total expenditure including office maintenance expenses given. Net profit for the year has given. Okay. Now let me see net profit for the year. Then our profit before tax, when computing our profit before tax, also this has included. That's the first thing. Then you have to remove this 89,760 from the business income calculation, because it has already included in the profit before tax. We cannot separately take it, no, it should be included in the profit before tax. That's why the separate note has given in the examination paper. Then see the extract of the profit and loss for this one separately given, but it should be included in the account in profit before tax. Then we need to remove it. Notes, total expenses includes rupees 3 million of accounting depreciation, charge on rupees 15 million worth building constructed year of assessment 14-15. Except for that, all other expenditure is allowable for income tax purposes. All other assets pertaining to this undertaking are fully depreciated for tax purposes. Now Lama, you may think that the profit has given it has included in the accounting profit before tax, and we already removed it from the profit before tax, but why examiner has given this information? Why lamai? To you to compute the exempt profit for the tax purpose. මේ දීලා තියෙන accounting profit එකනේ, then you have to take the tax exempt profit, then you need to do that calculation. Okay, then we will do the calculation first and come here under the workings. I have done that HCL Private Limited in the income tax liability computation for the year of assessment 1920 as a working computation of exempt profit for the tax purposes for power and energy. We have the accounting profit. In the adjustment, the note 1, accounting depreciation given. The accounting depreciation is for the 15 million worth of building. Then depreciation allowance for this building in the paper, it has given lamai constructed in 1415, therefore the rate is 10%. That's why under transitional provision very clearly given, assets acquired prior to 1st April 2018, the rates under section 25 of the Inland Revenue Act number 10 of 2006 shall be applicable. Therefore, that rate also, I am repeating these things, you should remember. Then after that, the depreciation allowance 1500, then the tax, the plus part and the minus exempt profit for tax purposes, it is not 89,760, it is 91,260. This is a purpose of the additional information given on the exempt profit. You cannot go without considering any of the adjustment given by the examiner. It has given for the purpose. The understanding of the purpose is your end at the examination. If you are reading it carefully, you can have this information. Okay. Then that one also we have completed. Now next one, 10% of the office maintenance and overhead cost of HCL relates to the above undertaking. 10% of the office maintenance and overhead cost of HCL. Now it's in the HCL's P&L. We will go for that. In the administration expenses where that office maintenance and overhead cost 72,800. From this 10% relevant to what lamai? Exempted undertaking. Can we deduct expenditure on the exempted undertaking? We cannot. Therefore, that 10% you have to add back. Okay. The lot of students, according to the comments, some students has missed this adjustment in the examination. Okay. Then it is office maintenance and overhead cost 10%, it should be disallowed relevant to the exempt undertaking. Exempt profit we have removed, the expenditure incurred to earn that exempt profit we have to disallow. The both adjustments completed. Now we will see any other thing for us to do in that exempt undertaking of the power and energy. Here, the company has entered into a power purchase agreement with the Ceylon Electricity Board in December 2016 to provide electricity generated from the other 3 windmills subsequently added to the power and energy sector in 2016. If you are not read this adjustment or information carefully lamai, at the examination you all going to be confused. Why? Now you are thinking, okay, there is a power and energy. Now you can remember in the temporary concession there was a reduced tax rate of 14% for power and energy sector. If the agreement entered on this 2016 whatever period, Then why the examiner has not given power and energy income separately? Why it is? Now you may get the confused and you all panic. Don't do that. Read the information carefully. In which date the HCL has entered into the agreement? It's December 2016. According to the provision, Lamai, to take the reduced tax rate of 14%. What is the date you should enter? It is the agreement entered on or before 10th November 2016 with the Ceylon Electricity Board. Any person who has entered into standardized power purchase agreement on or before 10th November 2016, then the කවදාද මේක enter වෙලා තියෙන්නේ? It is on December 2016. Is that on or before or on or after? On or after. Then can you take that reduced tax rate of 14%? You cannot. Then how am I knew this? Because I have applied it to the theory part to given scenario. Okay, please do it without theory. You cannot do the paper without only knowing the theory you cannot pass the paper. It's a win-win situation of the application and the theory. Therefore, on this last paragraph we don't have to do any adjustment. Then we will come to the next one, details of asset acquired in 1921 of the easiest adjustment, which is on capital allowances, additions during the year, land which is investment property, no capital allowances. Anyway, for the land, no capital allowances, its a useful lifetime is indefinite, and this is not the depreciable asset. Medical equipment 5 years, intangible assets, software usage right of 10 years, the 84 divided by 10 years, the actual useful lifetime has given. Motor lorry lease, whether it's irrespective of lease or not, the capital allowances, since it's a agreement entered on or after 1st April 2018, then 5,000 divided by 5 years. Motor car used for tourist transport. Are you going to give capital allowances or not? I am giving the capital allowances. Why? This is a commercial vehicle. The purpose what? Purpose is for the business purpose, using for the transportation. Okay. Then cutlery, cookery and linen renew every 6 months. Now these are one of the different adjustment. Now not different, you have to little bit think again. Then first thing, we are providing capital allowances on what assets, Lamai? Depreciable asset. If you know that, that's all. If you know it's on depreciable asset, the years are given in the 4th schedule. Then what are the years, what are the type of asset, then it is more than enough for the, not more than enough, you know how to give calculation, all these things. But now for this kind of the thing in the examination, you have to look at cutlery, the crockery and linen. Is these things are depreciable asset? No, Lamai. In the examiner very clearly given, renew every 6 months. If we can't use the asset at least 12 months, beyond the 12 months, we cannot consider it as the asset. This is what? This is expenditure incurred on production of income. Cutlery, cookery and linen. Without these things, can we maintain a hotel? We cannot do that. 2.4, this is allowable deduction, no capital allowances. Then it is details of assets given. Okay, then this is not charged to the income statement. That's why I am telling the quality of reading is matters to you, matters a lot to you. Then asset, this has not charged to the income statement. We cannot give capital allowances. Then for the tax purposes, then 2,400 entirely is the allowable deduction. Okay, we will come to the adjustments. In the P&L, we don't have anything to look at on this. Capital allowances, how it comes, section 16, 4th schedule to the Act and the Transitional Provisions Gazette notification. Additions during the year, should be 1920. Since we are in the 2021 Lamai, I also a little confused. It's 1920. Then investment property not eligible for capital allowances. if it is not eligible, please write why. Then write what you need to write for the paper as the answer script. Okay, medical equipment 5 years, intangible asset 10 years. It has given actual useful lifetime has given. You have to apply that. If not, if the useful lifetime is indefinite, the 20 years as given as the number of years. Okay, is it 20? Yes. Then motor lorry lease, it's irrespective of lease, capital allowances should be granted. Motor car for tourist transport is a commercial vehicle. 5 years we have to give the capital allowance. Cutlery, the crockery and linen not eligible for capital allowances. We cannot ignore it, we have to come for it. Cutlery, crockery and linen fully deducted under section 11, which is incurred for the production of income. If you, I think no matter to go for answer, it's just a cost divided by the amount and the 2400, it's in the answer, the question paper itself it has given. Okay. Now what next we have to do? Next one is the depreciation allowance claim for the year of assessment 18-19 was 32.54. None of the assets were fully tax depreciated in year of assessment 18-19 unless otherwise specifically mentioned. Therefore, this is a depreciation allowance, or rather capital allowance plus depreciation allowance on assets acquired up to 18-19. The same amount is continued, then no harm, you can apply this depreciation allowance on opening depreciable asset 32,540. See, it's really easy, this kind of things. Then tax receivables include WST paid at source during the year. What are the WST paid at source? Rent we have taken, interest income is still we have not taken. Don't forget these things. Then economic service charge paid during the year was 120 million and the tax installment payment was made in for the year 450. Once I read it, I am going to the taxable income and immediately I have considered it under tax credits, which is economic service charge 120 and the quarterly installment payments which made 450,000. Then that 2 adjustment also done. With these 2 adjustments, Lamai, all the adjustment we have discussed. Now we need to, I think all the adjustment discussed, yes. Now we need to come to from the beginning to end, we have to check the adjustment. I think income statement, nothing to take. Revenue note, nothing to take. Other operating income, rental income considered. Royalty take. Dividend we have not considered. It's a 1,850,000. It should be removed from the business income and added to the investment income. In the business income, dividend income from Healthcare Drugs Bangladesh Limited, it is net dividend. Tax as investment income, consider under investment income, but Lamai, this even the investment income, this is not tax, this is exempted under 3rd schedule. We will come to this. The dividend income, where it is, foreign dividend income exempt as HCL has more than 10% of the share capital invested. This is last time, Lamai, this adjustment as same tested. These are bonus adjustments to you. Then the next one, cash award received for being a high quality healthcare provider year 2019. I have explained this. This is a gift received on behalf of the business. This is part of the business income. Now it already included under other operating income, therefore it's included in the profit before tax. Therefore no adjustment required. Okay, it is a gift received on behalf of the business, section 6 subsection 2F, under the gift received on business, it's the part of the business income, therefore no adjustment required. Done. Then the next one, which is Profit from sale of fixed asset considered. Gain from disposal of private company shares considered. Done. Then remuneration, no adjustment we had, therefore this is incurred for the production of income, no adjustment. Provision for gratuity, definitely disallow, 164,700 under section 10, subsection 1b Roman 8, it should be disallowed. The gratuity provision, 164,700, it is disallowed. What next? It is brand launching expenses we have disallowed and claim against the investment income. Write-off of outdated drugs, it is a kind of a inventory write-off, it is allowable deduction. Why? It is incurred during the year, it was inventory maintained for the production of income, then it is allowable deduction. Then next one, office maintenance and overhead cost, that 10% part we have taken. Did we taken it? Yes, I think we have disallowed that. Yes, we have disallowed it. Then office maintenance, the other part, it is allowable deduction. Next one, staff welfare we have taken, repair and maintenance done, fine and penalties done, advertising and business promotion, it's assumed that incurred for the production of income since no information has provided. Then in that kind of the adjustment, then remuneration likewise no need to take into the business income calculation, but advertisement, business promotion, that directly affect to the tax computation, please take that expenses and write your explanations, okay. Then what next one, depreciation and amortization, it should be disallowed. Next one, depreciation and amortization disallowed under section 10, which is 116,800, that also completed. And next one, ISO certification charges definitely incurred for the production of income based on the business, it's a allowable deduction. And anniversary expenses we have disallowed, CSR disallowed. Change in fair value of investment property 42 million, it should be removed from the accounting profit. This is unrealized gain, therefore change in of fair value of investment property, this is unrealized, expense has reduced due to this gain, therefore my profit before tax has increased, then I need to remove it from the profit before tax. I think it is clear to you. Then next one, finance cost. From this loans and debenture interest we have removed 2,000 or something, under that the bank loan interest on the investment. Other than that, the bank charges incurred for the production of income, lease, overdraft and the long term loan and debenture interest, we have to check the restriction under finance cost. Under section 12 all of these are eligible, but we need to look at the restriction on finance cost. Is a finance cost, computation of disallowable finance cost as per income statement, long term loan and debenture. From this lamai I have removed that 2,900 which we already disallowed. Then we have to, without that amount we have to take the value. Then overdraft interest and the lease interest. Total finance cost is a summation of these three. Then total borrowing, all these things I have extracted from the pre-scene. You can go for the pre-scene lamai in the PowerPoint. If nothing to miss to you, then the balance sheet items are there. Here these are the non-current liabilities and current liabilities. In that the interest bearing borrowing, interest on the short term and long term, other financial liabilities, all these things I have extracted from the pre-scene. I just show the pre-scene information. Then stated capital and reserves from pre-scene. Then maximum borrowing limit as per section 18, stated capital and reserves plus stated capital plus reserves into 4 times. Since the manufacturing organization it is 3, other than manufacturing organization 4. If you have gone through the paper, there are the 4-5 segments are given. From that 5 segments lamai, I thought the lot of high probabilities goes to other than manufacturing. Therefore, I have taken the 4 times. It is a combination, but I have taken 4 times because high value of the turnover goes to other than manufacturing. However, the stated capital plus reserves into 4 times is higher than our maximum borrowing, it's higher than our actual the borrowing, what we have 2.5, but there is a 50, then we are in the safeguard. Excess of borrowing than the maximum borrowing limit as per section 18, nothing. Disallowable finance cost, nothing. Then you have to write this, since the actual borrowing limit is below the maximum borrowing limit, there is no disallowable finance cost. Okay. Then finance cost also we have adjusted. What next we have to do? I think the finance income. Interest income from fixed deposit, interest income from listed debenture, staff loan interest, change in fair value of financial asset. That first 3 we have to recognize under investment income and remove from the business income. Last one is unrealized gain, again it should be removed from the business income. We will do all adjustments together. The change in fair value of the fair value through profit and loss, unrealized, it should be removed from the account in profit before tax. Fixed deposit interest, debenture interest and staff loan interest, all these 3 lamai categorized under investment income. Categorized under investment income. Therefore, we have to first remove from the profit before tax and then we have to take it under investment income, and I am doing 2 things here. Now you can see fixed deposit interest income gross, interest income on listed debentures gross, staff loan interest, these 3 I have taken under the investment income. That part is really easy. What is the part student forget to do? To claim WHT at source. Examiner very clearly given that on this investment income, WHT has deducted at source. That means at the time of receiving, I have received after deducting the WHT. Therefore, the WHT credit. Now, lamai, for staff loan interest, do we have a WHT credit? No, only 2 interest income. That means the summation of these 2, which is 151,850. When it comes to here, 5% on FD and savings interest, 151,850 into 5%. Before forget it to me, I have included it here and completed. Then next one, next nothing to do. The students are missing one thing, is a gratuity payment. When you are doing the gratuity provision, lamai, keep in mind, I should look at what is the gratuity payment. Don't forget that. Okay. Then the gratuity provision is there and gratuity payment, how to compute, lamai, all are from the pre-scene information. Opening balance of the gratuity given, closing given, during their provision given, actuarial gain loss is given, OCI in the net of tax, which is gratuity paid 51,857. This is the last one for the business income. Okay, all these things are in the pre-seen, opening, closing, provision. It's in the unseen question, actuarial gain loss. It has given in the pre-seen. It is C under the, yeah, this is the pre-seen information. Then the actuarial losses on defined benefit plan, net of tax 3,243. It has given NLMI in the balance sheet or rather financial position. It has given under long term the non-current liabilities, the in the non-current liabilities, employment benefit liabilities, opening and closing is there. You have to take all this information from the pre-seen, and finally what is the gratuity payment. Now the summation of the plus side and summation of the minus side, we have taken all adjustment, nothing to do. Then the plus deducted by the minuses, there is a business income of 2.2 billion, and this my common note I am telling you to take in a 1 minute. Other than specifically mention adjustment, all other expenses and income considered as allowable for tax purposes. That's why that remuneration, all these things we have not included and put a common note. Okay, business income completed. Then we have to take the business income to the taxable income, which is under the assessable income part. First source is the for resident company taxation business income. We have take that. The next one is the investment income. We have to take the summations, all the adjustments done. Rent income done, interest income done, gains on realization of shares 15,000 done, and finally foreign dividend exempted. Royalty income, it is there is a loss. Anyway, the loss can be deducted from other investment activities. After considering that loss and summation of all these, it is the figure of the assessable income from investment 191,550,000. Then it should be comes to here. The total assessable income is summation of these two, 2.4. It is and the qualifying payments. Now see, assessable income is higher than the qualifying payment, then you can claim the entire qualifying payment to the government, but that the trees to the Katunayake airport, that is not eligible deduction as the qualified deduction as the qualifying payment. Then deduction from the assessable income is only 4,000. I am arriving to the taxable income. Then I am arriving to the taxable income. From the taxable income, now there are two tax rates. There is a composition of income tax liability in with the two tax rate. One is 10%, other one is a normal tax rate of 28%. Therefore, the 10% on what lamai? 10% on private limited equity shares disposal gain 15,000. This one you have to take separately from the taxable income. First do that. Normal rate එකට එන්න කලින් reduced rate එක කරලා ඉවර කරන්න. Finish off the reduced rate and come to the normal rate. Then tax on taxable income, first part on realization of investment asset on shares in private limited company. It should be private limited company. Then 10%, 1,500. Now you don't have any worries, lamai. The capital gain tax paid we have included as a tax credit as the same in the investment asset on capital, the private company shares, the payment of the capital gain tax. Okay. Then the next one, the balance income tax. Balance income tax we have to take into the balance taxable income at the rate. How to compute the balance income tax? 2.436 minus 15,000 and at the rate of 28%. Total tax liability 679,413. All the tax credits we have considered. WHT with the adjustment considered. Economic service charge same way when the reading question we have taken. CGT when the reading question and doing the adjustment we have taken. Quarterly payment, reading question we have taken. Foreign tax credit at the time of royalty income we have taken. FD and the savings interest at the time of reading the question we have done. Now all the tax credit, the 579,573, there is a huge balance tax payable which is 99,841. This is the end of your 30 marks question. Is this difficult, Lamai? Is this question is difficult? No. In my thing, only 2 adjustment you had a little bit think that exempt amount and the expenses incurred on exempt amount. But other than even that one also you can do completely. You can do podak hitwana karaganna puluwan. Other than that, the entire this 30 marks it's in your hand. If you practice this and if you read the present carefully, this is in your hand. Then this is the end of the discussion of the company taxation, resident company taxation 30 marks question. Then I will meet you again when discussing the writing part of the part A and B of the same question. Thank you.